All right, good evening, everyone. So AngelPlus Fund is what we're about, and you'll understand the name in a second when I go through it. So some bits and bobs about us. We've been around the block as well. I think, as you've heard today, people have been there and built tech businesses and sold them. And we got together originally as a sort of selfish thing for ourselves to invest in some tech companies, and we thought, yeah, it's going quite well. But where we made money, where we lost money, the difference, the delta, was actually when we invested alongside people who we believed in, who also invested alongside us and took a seat on the board. People understand that? Right. So we call these people venturers, and it really defines everything we do. So we only invest when somebody that we trust and have checked out invests alongside us, pari passu, and takes a seat on the board. And it, a bit of a self-fulfilling prophecy. We've played with it for a while, but let me move on to exactly that. This is kind of the usual, frankly, anodyne slides about what I would just call normal investing. So in the time available, I'm just going to take you to the interesting bits, because otherwise you'll lose the will to live. Things you can't read, but there's a bit about us. We have very experienced 3 people who have run funds, and 2 people have built businesses. My colleague Adrian has built 3 businesses in life sciences, and been awarded an MBE for that and other works. And the figures are successful, and we thought we'd give it a go. We share the same religion in terms of backing what we now call ventures. We have a portfolio of tech businesses ranging from genome editing software, which is pretty scary stuff, being able to edit people's genes while they're still alive. Yeah, just dwell on that when you're having a beer later. We've got an Alzheimer's cure, this one, which is, we've had some amazing news about its efficacy. We've got a skincare business. We've had an exit, and I'll talk a little bit about this in the time available from this one, which is portable X-ray scanners. And these are the things that you sort of wheel around, suspicious-looking packages, and like in our cloakroom out there, no, I'm just winding you up, and you put this device on, and we were only able to announce this exit today, which was a coincidence, but a happy one, and I'll tell you about that in a sec. These are some exits from the other, from us all individually, if you like, before we got together. And there's some pretty stonking returns before. The exit that we just had is a modest 4x by comparison, but given that that was within 3 years, and it's our first one, we're over the moon. And a bit about it, because it tells really the story of why we exist. Portable X-ray devices, they look a bit like this. So if your bag's being checked out by one of these things, go up to the officer quickly and explain yourself. We got very fortunate to have a gentleman called Bill Moore, who's this guy. So he's nothing to do with Boundary per se, although he did invest in a fund because he wanted to. But we liked him, we liked the business, and he said he was prepared to put a slug of change of his own money alongside us and obviously our investors. It was an EIS opportunity, of course, and he's got a very big experienced executive life in this game, but also at smaller level, and that's really important because the companies that we're dealing with, they don't have much oxygen, but they need to reach the stars, if that's not a cheesy metaphor, and they also need access to senior contacts. So people who can interface with both sides of that are really, really valuable, and they've all got to get on. We look at the chemistry, we also look at the management team are mentorable. All of the other things about good tech investing we do, of course, but the key thing about the venture concept is it smokes people out who are not afraid to tell you that something's a bit broken in their business and ask for advice. And that aligns interests. Now, this all sounds very happy-clappy. It's just cold, hard, selfish altruism, what we call selfish altruism. Because actually, if you help people, if you align interests, you are ultimately helping your own investors and de-risking what ultimately is a risky sector. So yeah, he took over, took the reins and mentored the team, and yeah, absolutely delighted with him, and hopefully Kuber and their investors are too. Yes, okay, good.
So we've had some other good performances as well, and just some CAGRs there in terms of the growth that we've had there. We haven't had any revaluations in the last couple of tranches. It is an evergreen fund, but we are delighted with the progress, and we have about 11 or 12 million under management at the time of speaking. So the structure is we don't charge investors, we charge the companies, and that's kind of accepted. We do add value to the companies. I think they understand what they get when they meet a venture, and that person starts opening up their black book and changing the business. And it's someone they could never afford to work with as well. So that's really about us. Hopefully that was interesting, and if you want to discuss anything, I'll be probably propping up the bar later. Okay, thank you.